SPP is kind of I'd say stealth mode with respect to power markets. It's just not well covered. But the opportunity is, as you're going to review with us, is well, as you say, a storm gathering. I mean, the returns have been outstanding. This market dwarfs pretty much any place else you look in the country in terms of opportunity for standalone storage. Renewables, very competitive dynamic there. And I think we're all looking forward to seeing you shed some light on how this works and where the opportunity will reside as we go forward.
SPP is a fun market, as you said. Kind of maybe a hidden gem. As we look at SPP, just to give you an idea of how strong a market opportunity it is for storage, this graph here shows kind of over the course of the year of 2021, the cumulative daily 2-hour spread in the real-time market. So you think about this as kind of the rough revenue that you would expect if you had a battery in that market cycling once per day. So this would be a 2-hour battery, 120 being 120 minutes or 2 hours. So it's really looking at the top 2 hours and the bottom 2 hours in any day and taking the spread in that day and then summing it up over the course of the year. If you think about storage opportunity, SPP South should be in the conversation with all of the primary markets. And as we look at the outlook for volatility in SPP, it's only going to grow in our view. As we look at the dynamics, there's a ton of renewables continuing to come in. We look at the interconnection queue, mostly wind and solar, particularly solar. With solar coming in, you're going to get those net load ramps as the sun sets. You get the potential for the compounding net load ramps when the wind is declining as well. We talked about that as the super duck when we did our ERCOT webinar. So a lot of dynamics here really conducive to continued volatility. On top of that, we have the Inflation Reduction Act that just got passed by the Senate. We fully expect it to be ratified by the House and signed into law within the next few weeks. And we really see it as pouring fuel on the fire. So SPP is already very volatile. It extends tax credits for renewables, which will make it more volatile. It has a tax credit for storage, which means that storage is going to be that much more economic than it would have been without the tax credit. And so we see the opportunity for storage in SPP to be very, very, very strong.
We've observed a lot of volatility. We go through the RTB 120, which is the minimum 120 minutes and the max 120 minutes in the delta there. And you're talking about exceptional returns, particularly this year. We've realized all that we realized last year. We're not only 2/3 of the way through the year, not even. As we look forward, how about the day ahead price volatility? Is there a strong relationship between day ahead and real time price movements, or is it just really limited to real time?
So it's both. There are elements in both. And so when we look at the net load ramp in particular, that shows up in the day ahead market as well. The sun's going to set, and if the wind is going to ramp, you're going to have to move through the supply stack, whether you procure it in the day ahead or serve it in the real time. So you will see pretty large swings in the day ahead as well, particularly when I showed that week in the beginning of July that wasn't very spiky. It was just kind of a nice daily fluctuation. A lot of that showed up in the day ahead as well. So if we look and kind of think strategically about where to build an SPP, if we're looking for standalone solar, our biggest recommendation is to be away from wind and as close as you can to the urban corridor. This is the kind of Missouri River corridor where you have Sioux City, Sioux Falls, Kansas City. There's a little bit of load kind of as you stay to the east, and so being able to be close to that load means you're least likely to be in a wind oversupply location. And so standalone solar, I think, makes the most sense in the areas around these load centers that still have open land. If we're looking solar plus storage, chasing some additional volatility gets more interesting. So as you go further south, things get a little bit more volatile because you can't pull supply from ERCOT to the south. And then as you get close to the Ozark kind of southeast corner, that's where you're also a little bit more supply constrained. And so these are likely to be a little bit more volatile. And so that solar plus storage can be a little more beneficial. Standalone storage, best place to put that, we think, is where it's hard to build solar and wind. Otherwise, you might want to pair it with solar and wind. So kind of down here in the southeast, it's going to be harder to build solar and wind. If you have a small project, it can be kind of some of these super volatile fingers in the Southwest. Those maybe get interesting. And there are some munis that we expect to be following decarbonization pathways that are going to be looking to procure clean capacity. And so standalone storage that's close to those should be able to find some off-tank arrangements as well.